Piper Sandler Managing Director Kevin Barker. Kevin, thank you for being here.
Hi, Frank. Thanks for having me.
All right, so is it really just all about student loan payments starting back up in the fall? How much pressure does that really put on a card issuer like American Express?
American Express has started to see a slowdown in their network revenue and network volume. And so we saw that particularly in the second quarter. And I think that reinforced our view that the student loan repayments were going to have a pretty hefty impact on American Express in particular, just given their customer base and the trends that have been shown. And so, the average student borrower is going to have $400 payment, a median payment near $250. We expect that to be quite a bit of headwind, especially when you think about it. It's going to range somewhere between 20 could have upwards of $5,000 in payments per year that are going to be impacting spending.
All right, so student loans are going to pressure the business a bit, but you're also looking at the spending of large corporations. A lot of companies use American Express as a corporate card.
Yeah, we've seen quite a bit of slowdown in large corporate spending as well. It actually went negative on network volume for American Express this past second quarter. And we're also seeing slowing growth. Now, comps were really tough from last year, so that would be one of the big impacts. However, if we're seeing this broader slowdown in spending, I think it's just going to have an impact on the economy in general and Amex in particular.
All right, you also say valuation's a part of this story. Amex trading at about 14 times forward earnings, kind of pretty close to its historical averages pre-pandemic. When I look at other businesses that are similar, not identical, MasterCard and Visa, I see Visa's trading at 26 times, MasterCard at almost 32 times. Isn't this a reasonable price for the business you're getting exposed to with American Express?
It seems reasonable, but I think there's bigger risk to the earnings outlook and the growth profile for American Express in particular. When you think about Visa and MasterCard, they are networks that are really embedded across the entire population and already have structural growth. When you look at American Express, they're more cyclical and focused on a certain subsector of the customer base. And so that customer base is going to have different cyclical trends, whether up or down. And so therefore, they're going to have a little bit more sensitivity to that particular age cohort or that typical borrower.
You sound very negative, Kevin, but wasn't the story on Amex that their credit profile is so much better than some of the others because of its exposure to the high-income consumer, that it's exposed to travel and they don't really see a slowdown in travel, that restaurant spending is picking up and a lot better? Weren't all these I guess they all were the reasons to own American Express. Are you saying that those things are changing? Because I didn't get that from the commentary out of the executives on Friday.
Yeah, the travel's been great. A lot of what has happened since the pandemic has been great for American Express. Their growth is outpaced most peers, and the stock's outperformed because of it. However, I think those comps are getting more and more difficult, particularly as we go in the back half of this year and into 2024. In particular, we just did a student debt survey where we found a lot of the student borrowers are going to pull back, particularly from entertainment and restaurant spend. And so, although American Express, we do expect to have significant outperformance from a growth perspective or be able to see that network revenue, the incremental headwind is what I don't think the market really expects. And so, therefore, our call is more about the expectations, not necessarily American Express's performance.